Hi, this is Solidify. By the end of this video, you will have a complete understanding of the accounting equation and why it even exists. To understand the accounting equation properly and clearly, let's see the accounting aspects of a brand new business. It can be any type and size of business. So as a learning case, we have a hardworking and smart team of people. John and Partners. John and Partners started a new business and named it JCM PLC. The team as a whole invested $50 million of its own money to start up the business and adopted double entry accounting, the main and professional accounting. In double entry accounting, any movement of money or property changes at least two accounts. Now, what do we mean by that? For example, the $50 million injected into the newly founded JCM PLC must be recorded twice. So first, JCM PLC will record the $50 million funding it received from its owners as cash. Second, JCM PLC also captures the source of the $50 million by recording it as a contribution. A contribution is simply an account showing how much owners injected into their businesses. Now, John and Partners realized that $50 million was not enough because they wanted to buy a building for the business instead of renting one. So they decided to take a mortgage loan of $20 million from a bank and bought a building for the business. The $20 million is again recorded twice. First, JCM PLC will record the value of the building acquired, and second, JCM PLC also must record the source of that property, which is mortgage loan, for $20 million. All right, then out of the $50 million cash, JCM PLC used $2 million to buy various equipment for offices and other areas. Again, this purchase of equipment touches two accounts. First, it increases or creates the equipment account for $2 million, and second, since $2 million cash was paid out to purchase the equipment, the cash balance is now reduced from $50 million to $13 million. Now, the new business has all these resources. All these resources are called assets of the business. The $50 million that came from John and Partners is called contributions. This contribution is now the John and Partners equity. Equity is simply whatever came from or belongs to the owner. The mortgage loan is obviously a liability. Now, what we've built here is the balance sheet of JCM PLC. A balance sheet is a report on a specific day showing assets, liabilities, and equities. To make this balance sheet complete, all we have to do is add a title at the top, the specific date it was prepared on, and the total or sum of the amounts on each side. Now, notice that everything in the right is the source for everything in the left. In other words, the total of all the assets here is equal to the total of the liability and equity combined here on the right, as you can see. You can simply put that mathematically as asset equals liability plus equity. That is called the accounting equation, or sometimes called the balance sheet equation. Alright, here you have it. For more comprehensive accounting, check out the other videos linked in the description below. Also, you can always ask anything accounting on any of the videos. Alright, until the next one, take care.